Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome to the Kendall Report. In tonight's video, I'm going to be talking to you about a number of things, primarily the end of March. We're going to see some window dressing and some potential rebalancing coming in. I think a lot of it happened last week, especially Thursday, Friday. We're likely to see some continuing rebalancing as we come into Wednesday's close. This week we have a shortened week. We have a lot of data coming out. It will be the first Friday of April, and it's interesting this time because the markets are going to be closed. The bond market will be open on Friday, but the equity markets will be closed. I'm surprised they're going to release this thing, but the numbers are pretty big, and I'll talk about those here in just a minute. One of the things I ran into in doing research, I ran across this quote from Ray Dalio, and what he said was, we're halfway to a bubble like 1929. And it's interesting that he said that because that would mean that we're going to double from current levels before we get to that extreme level he's talking about. So I don't know if the person who wrote the headline, whether he actually said that or not, but I see a number of things going on around the internet, people having these attitudes and opinions. I talk about this a lot. This is why we have the quant software that we do, trying to stay away from that and be process driven. And that has everything to do with this channel and me talking about our database and all of those elements. But it's interesting that those type of comments come out because it actually forces you to double down and triple down. Things like there's a lot of analysts out there that are perma bears or perma bulls. They just keep doubling down and doubling down. And I'm very driven by the data. And I've been talking about our database, and one of the things that happened over the weekend was when we run our database on Friday, we get our intermediate database to update. And that was interesting because on Friday, it generated a substantial amount of short-term buy signals, and the intermediate database was just in a rotation phase. In fact, we got 2,091 buy signals on the daily and only 125 sell signals, and we moved to about 27% bullish. I'll go through the details here in a minute, but that's a significant event if you've been watching this channel every day. So as we go and look at last week, we had a lot of volatility. The S&P was all over the place. We're swinging literally one day to the next, just massive swings. But we did finish the S&P up 1.7%. The NASDAQ was down 0.6%, and the Russell was down 2.9%. These are substantial numbers because the Russell gave back a lot. It's been the leader so far this year. Year to date, the Russell is now up 12.5%, the NASDAQ up 1.2%, and the S&P up 5.8%. But this really brings us to this week because it is the final few days that are we going to get some rebalancing or windows dressing to come in as we come into Wednesday? And I think the answer is yes. I think a lot of that happened on Friday, and I don't see a substantial amount, but there's always a surprise, especially at the end of the quarter. This is a significant event. And I did mention on Friday that I thought that Friday's action was the more substantial part of this sequence, and we'll see if that's true over the next couple of days. But we are likely to see some further rebalancing, and the question is, what are we rebalancing to? Is the reopen trade going to continue where the small caps and mid caps are rotating in, and we see those indices still leading the way? Last week was certainly not that case. Maybe they claw back a little bit, but that's what we'll be watching as the markets go through this week. Now, as we look at the reports that are coming out this week, on Monday there is zero, okay? Tuesday there's the FHA price index coming out, not significant, but it is expected to show 11.5% increase, which does show that underlying inflation that's out there and it's continuing to grow. I think this is substantial we're seeing housing prices really start to spike. It's just about every YouTube channel out there is talking about a bubble in real estate. When that's happening, it's not likely to be a bubble at this point in time. As we go to Wednesday, the ADP report will come out expecting to show 500,000 new jobs. That's a big number. It's one of the biggest numbers we've seen for a while. And if you recall, if we look back on last week just for a minute, the initial claims came out much lower than expected, and then we printed under that 4 million number, 3.8 that I've been talking about. And I believe when we come into Thursday, we'll see further decreases in that continuing claims number. And I think that's going to be significant as we go forward. Also on Thursday, we're going to get the ISM manufacturing. That's expected to be an uptick about 0.7 up to about 61.5. My expectation is that all of these underlying numbers are going to continue to increase as the economy opens up and more states start to come online. So let's talk about Friday for a minute. And I think the report coming out on Friday sets up an interesting scenario for the beginning of next week and specifically on Sunday night. So we're going to see unemployment numbers released on Friday. They're expected to show 619,000 new jobs. The range is about 550 to 619,000. Unemployment to drop from 6.2 to 6.0. And participation rates expected to be basically unchanged, maybe uptick. I'm not sure how that's going to work out. But the markets are going to be closed. The bond market will be open, but the equity markets will be closed. So that sets the tone for a crazy opening on Sunday night. So let's go ahead and take a look at the charts and see how this week is set up. As I begin with the WaveTech overview, we start with the intermediate models. They continue to be at the 75.63% bullish. As I mentioned in the opening comments, we saw a rotation here. I'll show you that when I review the daily database. But we're continuing to see a lot of these indexes from the sector viewpoint to continue to be very robust. And we're seeing services the only one underwater, but most of them are up substantial amount. Consumer cyclicals up 56% now. And it's well into its cycle of 208 days of the 353 average holding period. But a lot of these indexes are doing very well, and they're likely to continue as we go forward. As I review the daily database, as I mentioned, we had 2,091 buy signals and 125 sell signals. That moved the bullish percent up to 26.96. So we're well above that 22% level, and the metrics that we'll be watching on this database will be, the next level will be 42%, but this is a positive event that we're able to move the bullish percent back above there. If you recall a couple sessions ago, we were down around the 15%. When we upticked to 17, I thought that was going to be the bottom of this range, and it was. And we're likely to see a continued rotation here over the next several days. Overnight, we're seeing some weakness in the futures that I'll cover in a minute. This general pattern on the database is likely to continue over the next several sessions. As we take a look at the S&P futures, on Friday's video, I did discuss that I thought we would retest the highs. We basically did that, and in fact, we got an RXT sell signal. So that number on Friday was 39.56. The market closed at 39.64. That signals a 1 to 3 day sideways movement or to the down with a bias to the downside. This is what we're seeing overnight. The markets are down 0.82. We're at 39.32. As we look at the market grid for today, there's a number of things to take notice to. We've actually traded down to the S2 number, 39.33. We're currently 39.3250 with a low of 39.31. We're likely to bounce from these levels. If we continue down, we would move toward the 39.17 possibility of going down to the 39.02 level. My expectation is that we'll hold here. We also have the 10-period moving average at 39.23. There will be fairly decent support between 39.33 to the 39.23 level. So I expect this to hold. The PPMs just do not have the upward momentum to maintain things just yet. There's still some consolidation. And as I mentioned a couple days ago, my expectation is that the market grid will stay in a sideways mode. Let's take a look at the SPX. So we'll get a better feel for the expectations both on a daily basis as well on a weekly. The same event that happened on the futures happened on the cash markets. RXT number 39.65. We closed 39.74. The ATH, or the all-time high, was 39.81. We came just short of that, and now we're looking at the futures, as I mentioned, backing off about 0.7, 0.8% off of that high. And we look at the market grid for today, the expectations would be for a minimum of 39.60 to 39.44, so S1, S2. The upside would be limited to R1, 39.88. That would be an all-time new high. The way markets are trading overnight, that may not happen. We could trade down as low as S3, but if we do hold 39.44, we could see a nice bounce intraday running back up toward those highs. But I do believe we'll see at least a 1 to 2 day sideways trading range just based on the RXT sell signal. We go to the weekly charts. What we're seeing here, it's something I've been talking about for a while, is this 10-week moving average continues to drive the markets higher. 38.76 is the 10-week. It's going up at around 20 handles, so that'll be 38.96 roughly. That will be substantial support. We look at the market grid for this week on the SPX. 39.45 is S1. If we go down to S3, that's 38.82. That would exceed that 10-period moving average. That could happen. Most likely we'll see the worst case this week is an S2. On the upside, you'll notice some interesting numbers starting to show up. We're looking at the 4,000 handle, and 4,003 would be R1. So we're likely to see the markets continue to move up in this range. Now we're seeing the PPM start to turn up here on a weekly basis. They're still in a very robust mode. PPM1 at 0.53, PPM2 at 0.90, and PPM3 0.62, all very robust trend levels, and we're starting to see them turn back up to their first and second derivatives, which suggests we could see an acceleration in the markets to the upside. So we're no way going to roll over here and die from what it looks like, but at least the primary support line will be that 10-period moving average that I talked about just a second ago. 38.96 will be that. S1 for the week is 38. As I mentioned, S3 is 38.82. I don't see us getting below that level. Probably an R1, S2 potential for this week. Next market we'll review is the NASDAQ. It's down 149 handles right now. Now, we did not get the RXT sell signal on the daily for the NASDAQ, but the momentum in the NASDAQ is still very negative in its configuration. We look at PPM1 at a minus 0.19, PPM2 basically flat at a minus 0.03, and then PPM3 is flat as well as far as the value goes, even though it's turning up through its first derivative. The overall pattern that I'm expecting from here is sideways, trading within the grid, and we continue to bump up against that 13,200 number that I've talked about a lot. On Friday, the big reversal that we saw late in the session moved us up back toward 13,000, but the substantial resistance continues to be at that 40-period moving average at 13,152. Kind of rounds off the 13,152, 13,200. That's major resistance. And the way these PPMs are looking, it looks like we're going to stay in a sideways mode. Let's go to the weekly chart so we can see exactly what the configuration looks like from that viewpoint. As I mentioned, I believe we're going to stay sandwiched between this 21 and 10-period moving average. 13,096 is the 10. The 21 is 12,828. As we look at the market grid for this week, 12,808, and R1 is 13,124. That's probably going to be the range. We could expand a little bit to the S2 number, 12,632. Could happen, especially since we're seeing the PPMs on a weekly basis starting to turn down. Now, PPM1 is at a minus 0.39 on a weekly basis. This suggests there's major resistance at 13,100. And as I mentioned on the daily, that number really is 13,100 to 13,200. I don't see us getting to that level, and there still needs to be some work here done. So I think the answer in the rotation that I talked about in the opening comments, we're likely to see the potential for the Russell trying to come back in overnight. The futures are negative by 1.46% and NASDAQ down 1.04. So the Russell is actually leading the way down overnight, but the S&P will be the leader. If you flash back to my analysis of the S&P, those numbers are going to be really important when it comes to what levels are going to hold on both the Russell and the NASDAQ, meaning that these S2 numbers is most likely going to be the extreme on the NASDAQ. The next market that I'll cover is the Russell. I just want to take a quick look at the weekly Russell. It did finish up 1.76% on Friday. We rebounded back toward that 10-week moving average. We're going to continue to see this sideways movement as the market grid has turned down. But if we look at for the grid for this week, this is the cash index. We're looking at the potential for an S1, S2 like in the NASDAQ. So 2184, 2143, upside 2258 is going to be the resistance, and the 10-period moving average 2228. So that's going to be substantial resistance. The thing to look at here is that the PPMs on a weekly basis are all very positive. We got PPM1 up at a plus 0.44, PPM2 0.16, PPM3 0.15. So the worst case in this market right now is a trading range between the 21-week moving average and the 10-week moving average. And it looks to me that we'll attempt to get back above that 10-week moving average, looking at the market grid for this coming week, looking at least an R1, maybe an R2 on the upside with an S1 on the downside. So it will be, I'll update this as we unfold during the week. The final market I'll cover tonight is gold. Gold is down 660. We continue to trade in this narrow range. We have been flat now for about 13 sessions, so the better part of 3 weeks, and we continue just to trade in a narrow range between low 1700s and around the 1730, printing up towards 1740. The configuration here, we're starting to see PPM2 turn up. PPM1 is in a flat mode. There's no signal from that on what it's likely to happen other than continuing in the sideways range. As we look at the market grid for today, we're looking at the extremes. Probably S2 is where it's traded so far. Possibility of going down to an S3 and the extreme STX. On the upside, that R1 number is going to be pretty solid there. The 40-day moving average 1764 is still the major resistance, and I still expect to see the market move toward that level. As we go to the weekly chart, the pattern that continues to unfold suggests that that 10-week moving average is major resistance, 1763, just mentioned that on the daily charts. That will be major resistance as we come into this week. On the downside, looking at the market grid for the week, S2 1712, R1 1745. We do have a short week ahead of us, so we aren't likely to get about beyond that range. But as I've been talking about, I think anything you see with a 16 handle on it ends up to be a buying opportunity. So anything under 1700 is a buy. STX this week 1691. Expectations are for a R1, S2 for the week. This will complete the video. Thanks for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.